We do now have the reading for what we've got for the GDP for the United States in the first quarter, 2.3%, the estimate 2%, so significantly better than the estimate. But if you remember from the prior quarter, 2.9%, so significantly better than expected, but significant softness too relative to what we got in the last quarter. Personal consumption coming in at 1.1%, that reading there in line with expectations. There was expected to be significant give back from the 4% we got in the prior quarter too. Just looking for the employment cost index too here, also pretty critical at this stage for the first quarter, 0.8%, better than consensus estimates, or at least higher, better an interesting word, 0.7% there, the prior 0.6% too. And for the core PCE quarter on quarter, we've got 2.5%, bang in line with estimates. Of course, the data that we get on May 30th, which gives us the year on year and the monthly breakdown, perhaps the more important figure there. For more reaction, we're joined by Bloomberg's Jeanna Smialek and McKee Jersey of Bloomberg Intelligence, and Eddie Perkin of Eaton Vance, also still with us. We have a smorgasbord of individuals. McKee, your take straight off. Better than expected on the GDP line.
Yes, but not. When you look at the breakdown, it isn't all that great. This is sort of an inventories and a trade story. The trade subtraction from growth lower than it was in the previous quarter, and the inventory build about double what it was. When you look at the business spending, which is, we knew consumer spending was weak. Business spending is what everybody wanted to see. And non-residential fixed investment was up 6.1%, not bad, but down from the fourth quarter's 6.8%. Equipment spending, 4.7%. Yeah. In the fourth quarter, it was 11.6%. So if we were supposed to see an immediate benefit from the tax cut, doesn't look like that business went out immediately and started spending. But there is a number that is really sort of a jaw dropper here. This is one of those. This has got to either be continued or it's a strange one-off. When you look at the ECI, wages and salaries up 0.9%, almost double what it was in the first quarter. I don't have the number in front of me, doesn't go back far enough, but it's at least the highest in more than a year. And so it does look like there's more money in people's pockets.
Jeanna, dun dun dun. Question is, as Mike posed, is this sustainable? This is something you pointed out too.
Yeah, I think this is an excellent question, and certainly the key question for the Fed going forward. You know, I think they're going to look at the CCI and say the Phillips curve, this unemployment-wage relationship, does seem to be kicking in. The question is, are we going to see that in average hourly earnings report when we get the jobs report next Friday, and is it sustainable as the year wears on?
I can give you a statistic. This is the biggest quarterly increase since the first quarter of 2007. Yes. So it is a very big number.